Many Americans may be worrying a little bit more these days about maintaining a good credit score stemming from financial stresses of the pandemic, unemployment, and other money matters. Schools First Credit Union offers services and tools to help people manage their financial wellness. So today for Financial Wellness Wednesday, Schools First branch manager Tamara Beaver is here with tips for improving credit scores. Welcome to the show, Tamara.
Thank you, Aubrey. It's a pleasure to be here.
So this past year has been a big financial hit for a lot of consumers. Many were out of work or just faced financial challenges. Tell us what you've been seeing when it comes to credit scores in some of your branches there.
Yeah, so unfortunately, we have seen a lot of people losing their income and they're under a financial stress that they've never been faced with before. So they're coming to us for help. They're looking for ways that they can help maintain the credit that they've worked so hard to build or improve credit because of these times.
Now, what are some of the simple things people can do to really protect or even improve their credit?
Absolutely. The most important thing you can do to protect or improve your credit is make sure that you're making your monthly payments on time each and every month. Now, if this is becoming difficult for you, we recommend that you reach out to your loan officer as soon as possible because they may have some options for you, whether that's deferring some of your payments or reworking your debt so that you can manage that monthly payment. But reach out to your loan officer as soon as possible if this is becoming difficult.
Good advice. Definitely on-time payments are a good place to start. What other tips do you have?
The next most important thing I would say is to pay attention to your available credit and make sure that you're not using more than 30% of that credit. So let's say you have a credit card with a limit of $1,000. You want to make sure that you're keeping that balance at $300 or less. Once you hit that 30% usage, we really see that impacting your credit because the credit bureaus want to make sure that you're not relying too heavily on that credit to get by.
And you mentioned the credit bureaus. They're always like scoring you, rating you. What are some of the other things that they're going to look at to come up with these scores?
Absolutely. So they're going to look at the length of your credit. How long have you had credit and how have you maintained it over that period of time? That's why you will hear don't ever close your oldest credit card because then you lose all of that important payment history that you've made on that card. On the other side of that is being careful with extending new credit. That shortens your average credit history. So be very cautious of that. They also look at a mix of credit. So they want to know how many different various types of loans do you have? You want to have a vehicle loan, a mortgage loan, a credit card. If you can, showing that you can maintain payments on all of those different loans will definitely help you build an excellent credit score.
Tamara, can you give us an idea of the different credit scores? What is considered not so good and what is more favorable?
You know, it varies depending on what your score is being utilized for. So it's very hard to say because there are so many different credit bureaus. There are the three bureaus. They all have a different formula. They get your, they formulate your score in a different way. So the best advice that I can give anybody is to just listen to the suggestions that we've talked about today, implement those into your daily life. That way, you know your credit score is optimized no matter who is accessing your credit. And if you're doing these things and you still want to see your credit improve, I would recommend that you look at your credit cards and paying down your credit cards or paying them off completely.
So are you saying that even if you feel like you have a pretty good score, there are still ways to get it up even more?
Absolutely. And the best way to do that is to focus on paying down your credit card debt. Once you get under that 30%, you should see your credit score going, raising.
And what are the things that you see that I guess are the common mistakes people make that causes those scores to start taking a dive?
You know, some of the most common things we see are people not reaching out when they're facing financial stress. So let us know if it's going to be difficult for you to make your payments. So we go back to making those payments on time each month. Overutilizing their credit card. You have to make sure that you're not relying too heavily on that available credit that you have on your credit card because that really does impact your score.
And then how soon can those scores improve when you start maybe, making your payments on time, you start getting caught up? I mean, will you see them improve right away or is it like more of a marathon over time?
It's definitely a marathon over time. We typically say give it at least 6 months to see where your credit score lands after you've been kind of doing all of these things. And you should absolutely see your credit score going up little by little immediately, but it's a marathon. Credit is so interesting because it doesn't take very much to damage it, but it's very hard to repair it once it's been damaged.
Sounds a little bit like gaining weight and weight loss, Tamara. Thank you so much for joining us today. For more tips and other financial resources online, you can go to SchoolsFirstFCU.org.